All right, guys. I can mute the mic like that. That's kind of cool. Okay, guys. So, yesterday I started reviewing the market. Today I want to finish reviewing the market for yesterday, and then I'm gonna film a market recap. Then after that, once I get that market recap filmed, I want to recap the entire week. Then, um, then yeah, I'll move on to other things. But I want to finish my back testing. Once again, a lot of the time when I do back testing, I'm gonna be doing this anyways, whether I be live streaming it or not. So might as well be live streaming it. So I had this from my last back testing session. It's kind of cool how everything kind of lines up perfectly. You know what I mean? Man, that's a nice inducement. I'm not gonna lie. All right, guys. Let's go ahead and keep back testing the market yesterday. So it's kind of crazy how perfect these markets are when you really actually understand them at a deeper level. Like, look at how the market perfectly manipulated midnight and 7:30, which were our true opens. And then at that point, that's when we went up. High resistance liquidity, right? Why was the market generating high resistance liquidity this whole time? Think about why. Why was it not ready to run liquidity? Because we had not yet swept our true opens, right? This is such a subtle detail, but this actually makes a difference. Check this out, right? Look at this. I switched out the fan, so it should be working now. I think it's not making a sound, so we're good. So, yeah, midnight true day open and then 7:30 true session open. Why were we generating high resistance liquidity all after or all late morning, right? Because we hadn't come down to our true opens. Look at this. 7:30 true session open, midnight true day open. High resistance liquidity. All through here because we had not yet taken our true opens. And then once we take our true opens, all of a sudden, now it's low resistance liquidity. Pretty cool, right? So let's go ahead and make a note of this. Actually, let's mark it out like this. True opens taken here. Now the market is ready to expand to run liquidity. And now all of a sudden this once high resistance liquidity is now low resistance. Now we're on the opposite side of the curve. That once high resistance liquidity becomes low resistance, now that we've taken our time levels. Pretty cool, right? So this was high resistance, true open swept, and then it became low resistance. Let's go ahead and screenshot this, put it in the journal for today. But like, guys, these markets, most people have no idea how perfectly accurate and precise these markets really are. And a lot of the time they'll think like, oh, it's just bad price action. No, guys, it's not bad price action. The market was very intentional why it did what it did when it did it. Smart money, they know what they're doing, right? They're not just gonna just be like run liquidity when it's not time to go run liquidity yet. Right? So market high resistance until true opens were taken. Right? Pretty cool. Like, honestly, guys, when you look at it like this market was like perfect today. We had a yesterday I meant we had S&T with this low. Only thing is, this isn't. I wish this was like 1 minute earlier, because then it would be sequential S&T. Maybe we could consider it 6-hour S&T anyways. What do you guys think? Can we consider the 6-hour S&T? I guess we still have the S&T with this low. So we could do partial 6-hour S&T. So yeah, there we go. Pretty clearly that was manipulation. The reason I have it marked out as this low and not this low is because this low would not be a 6-hour S&T. I don't know if that really matters, but once again, I'm just learning with you guys. Like, I don't really know all the details. I just kind of move forward and try and figure it out. So, yeah, 7:30 true session open. I guess we have S&T with this low. On YM, huh? Interesting. And then we have another S&T with YM with this low. Wait, no, we don't. Anyway, this is just something that we just learn and try and get better at with time. We don't have to be perfect, but look at how we sweep these true opens. This is just so fascinating to me. So the market had been generating high resistance liquidity. What kind of key level did we push into? I'm curious. I guess we had a 1-hour breaker. That was probably the key level, huh? Or maybe it was a 1-hour implied for value gap. You know what? I'm actually really starting to like implied for value gaps. And I've never started using them until now, but it's like they're actually really, really nice. Because, why wouldn't... If a fair value gap makes sense... Like if a fair value gap works, then the same logic should be, it should be able to cut through candles, right? That's what makes sense to me. Nah, I'm just gonna send it. I think that implied for value gaps are totally valid. I'm not gonna lie. 1 hour implied for value gap. We sweep our true opens. Yeah, this is really cool. And then what happens? 5 minute change in state. I think it was like day. He said, focus on gaps and not anything else. And actually, I might honestly kind of agree with that. I mean, all the other stuff works too, but um, it's when you focus just on gaps, you really just focus on where's the inefficiencies. I don't know. I don't really know what I'm saying. I'm just learning with you guys. So anyway, true day open, true session open, SMT with this low, and then we have a 5 minute change in state right here. And then for me, once again, anything within the wick is a valid entry. So I could enter on the close here. I could enter anything within this candle. To me, it would be valid, right? So I would actually have quite a bit of time to get my entry. Like I wouldn't even need to enter it right away. So this happened at 11:40. So the nice thing is here we're going into our lunch macro. That's kind of cool, right? We have our lunch macro. So here's the close. Once again, anything in this range to me, anything below the wick, I like. That's a valid entry for me. So I like anything within this range. So 5 minute change in state. And then yeah, I would enter on the close. I'm pretty sure I already put this in here. Yeah, I put 11:40 CISD close. But I didn't know what key level to use. So now we kind of have the key level, which is this 1 hour gap. So 1 hour implied for value gap here. And then 5 minute change in state. So yeah, like I said, 5 minute change in state. I would enter on this close here. And you can put stop loss. I'd probably put stop loss. Yeah, honestly that's probably fine. And then we go run all those low resistance highs, right? Because they became low resistance once we got to the other side of the curve of this model. So 1 hour, 5 minute. So entries at 11:45 going into the lunch macro, right? Look at this. This is amazing lunch macro trade. I don't always see the lunch macro work, but this really actually worked very nicely. I'm actually so curious if this was a precision swing point, because not gonna lie, this would be the type of trade that would have a precision swing point. Maybe it was a 5 minute one. Now I'm really curious. Yeah, bro, this was a precision. Holy. 5 minute precision swing point. Nah, that is obvious, bro. That is beyond obvious. What up, Simon? Dude, Day's actually a genius. Like, he's one of the smartest people on this planet, bro. Like, how the crap did he figure out all the, the specifics that when a candle on one asset is red and another asset is green and it sweeps midnight, that's going to be an extra confluence for the low of the model. Bro, he's so smart, man. That guy's so smart. What the heck? But yeah, once again, this is something that I was just now thinking about, right? How do we know that this is going to be high resistance liquidity all through here? Because we have not swept true opens here. True opens get swept. Now we're on the opposite side of the curve. Now those highs become low resistance. So 5-minute change of state of delivery close off of a 1 hour implied for value gap because it's not an actual, like, what's the word that they use? It's not a pattern looking FVG, but it is conceptually an FVG. That's why I call it implied, because I'm merging candles together. 5-minute change in state, and then we go run up to those low resistance highs, and yeah, you can just take profit there. That's 3-1. So flow state close. And the most beautiful part about this is it's perfectly positioned in the lunch macro. Like the people who run these markets know what the heck they're doing, bro. Like this is too perfect, bro. Too perfect. Look exactly when this happens. This is the lunch macro. And I've honestly not really paid attention to the lunch macro that much. But now that I've seen it work so specifically, like this lunch macro, this is way too specific of a liquidity run for it to not be super, super important. Like when the lunch macro works, this is going to be very specific. Like, holy crap. Lunch macro was exactly when we went to go run liquidity. What up, Telvin? How are you, bro? I mean, these markets are so perfect. It's insane. So yeah, lunch macro. So 11:50. This is one of the first times I've seen the lunch macro work so cleanly. This is like amazing, actually. And T-Trades really thinks macros aren't a thing, bro. T-Trades, I honestly, bro, I don't really like T-Trades that much, bro. He's like, I don't know. It's just like he's like, well, technically it's just open, high, low, close. Yeah, but the macros, that's like saying, it's still, the phenomenon of macros still exists. Even though open, high, low, close describes the macros, they still exist. The macros are still real and exist. I don't know, man. I disagree with a lot of people, and I just do what makes sense to me, bro. Because at the end of the day, in the trading world, no one's going to tell you the correct way to do something. You just got to figure it out. You got to figure it out. Because everyone's trying to scam you and lie to you, and it's like, at the end of the day, you just got to figure it out. There's no one's going to hold your hand and babysit you, telling you this is how you have to trade. If anything, they're going to tell the opposite, right? They're going to tell you this is to trade this way, and they're trying to distract you and lie to you, right? Or get you to buy a course. And at the end of the day, you have to jump into the chart yourself and figure out what actually makes sense to you. And that's the only way, in my opinion, because the markets themselves are going to tell you exactly what happened. They're going to tell you exactly what happened and how you can learn from it. And if you go into the markets thinking anything else, that, because T-Trade says something is the way that it is, that's exactly what's going to happen, and that's why it's going to... No, bro. T-Trades, the market is more right than T-Trades. The market's always 100% right. If you want a 100% win rate, just go into the market and figure out why it happened. And if you're wrong, learn from it. The market's always right. So, yeah, I'm going to ignore everyone and I'm just going to focus on what actually happened in the market. How can I learn from what happened in the market? And that's just my own opinion. People can disagree with me, but the market's going to tell us everything we could ever want to know about trading. So we just got to jump into the market and learn. Lunch macro. Boom, dude. Look at how clean this is, guys. I mean, you cannot deny macros. When you see stuff like this, we run the high of the low resistance liquidity perfectly at 1210. Like, holy crap, bro. And people really think macros are... No, bro. You guys obviously just have not spent enough time in the charts. Like, I'm just going to be, like, totally real with, you know, this is just obvious to me. It's so obvious. Look, you can't make this up, bro. 1210 is exactly when we finish our low resistance liquidity run. It's like they literally have it timed, bro. They're literally like, all right, boom. All right, did we finish running low resistance liquidity? Yep, we did, bro. Oh my gosh, it's insane. It is insane, and no one else is gonna get it except for us because we're the only ones willing to backtest it and go through the charts. And that's just the reality of it. But yeah, did I save this as a new template? I'm going to start paying attention to lunch macro more. I'm not going to lie, guys. Because I really do think that it's pretty nice. Imagine you literally just entered right at the start of the lunch macro. Could you imagine that? People would think you're like a wizard. What up, Gio? How's it going? Look at how perfect the lunch macro was. And honestly, guys, I like I said, I need to give more credit to the lunch macro because when it's right, when the market had high resistance liquidity during the afternoon. Let's actually make a note of this. First, let's screenshot this because I think this is so cool. Right? So what kind of trade is this? It's a 1 hour key level, 1 hour implied fair value gap because it's not a I forgot the word again. It's not a pattern looking fair value gap with that 3 candle formation. It's just I'm merging the candles together. So implied fair value gap and then a 5-minute change in state. And look when we have it happen right at 11:50 to 12:10. It's just literally, it's almost just like bizarre how perfect these markets are, guys. And yeah, what up, Forex? How's it going, bro? It's genuinely incredible. Let's go ahead and screenshot this snipping tool right here. And like I said, the only person that's ever going to tell you the truth about the markets is the markets themselves. You have to go in. You have to look at the markets yourself and learn from what happened because people are going to... This is a game of money. Real world, real money. Right? Anything that involves money, people don't tell you the truth about what's actually happening. People don't want you to know how to pay taxes. It's the same reason they don't tell you how to, be financially independent in school. People don't want you to know how to be financially independent. People don't want you to know that kind of stuff. It's so stupid. It's so stupid. Like, they should teach it in school, but they don't because it's money, and money drives the world. And, dude, I don't know. It's just kind of sad because... Yeah, we can learn as much as we want just from going into the charts, and anyone else saying otherwise they're distracting you. They're distracting you 100%. Flow state close, 1 hour, 5-minute. Yeah, that looks good. So 1 hour key level, 1 hour key levels align with 5-minute change in state of deliveries. We entered on the close with this one to go run liquidity during the lunch macro. Yeah, that looks good. And anyway, guys, back to what I was saying. What's your goal? What do you mean? What do you mean, what's my goal? Like in trading, in the long run? To be a successful trader. I don't know what else to say other than that. That's my goal, obviously. Be a successful trader. Lunch macro, guys. Okay. The other thing I wanted to note is pay attention to when we roll run liquidity. It's right during the lunch macro. You can't make this up, guys. You can't make this up. Let's go ahead and mark this out. Oh, I was going to make a note of when is the lunch macro likely to work? When late PM generates liquidity and is high resistance. Makes sense, right? When late PM is generating liquidity and is high resistance, the lunch macro is more likely to work. Is this your main source of income? Bro, I'm still a trader and learning, bro. So I'll put it this way, oh my gosh, Walgreens. Okay, but I'll put it this way, bro. I'm still trying to get better. I'm not even claiming to be, to have made a ton of money, right? Because if I was, you wouldn't see me here in my parents' basement, right? But how do you think you get to where you want to be? You have to grind, work hard, keep going, and never stop, bro. So, but yeah, right now I'm working. This is only just me. It's I'm working as hard as I can on it, but in the meantime, I'm having to work during the day. So I'm working during the day, and then eventually, I'd love to become a full-time independent trader. I think that would be super, super sick, right? But at the end of the day, guys, trading is a skill, just like going to the NBA is a skill, or be doing anything is a skill. It takes time, and people who are trying to short run the process, it doesn't work like that. It takes time. So yeah, I would love to have this become my main source of income. It's just a long process, bro. It's a journey. It's a journey just like anything. When's the best time or structure to enter the market with the least drawdown? I'm gonna full point my three. When's the best time or structure to enter the market with the least drawdown? Probably like this, right before a macro, right? The macro is gonna deliver price to the low resistance liquidity. So, if you just enter right before the macro targeting the low resistance liquidity, that's probably the best time to full port, right? Because the macro is going to deliver price to low resistance liquidity. Same with news. News is going to deliver price to the liquidity that it wants to go run. The macro is going to deliver price to the liquidity that it wants to go run. So right before the macro. That's what I would say. So yeah, when is the lunch macro more likely to work? When late PM has been generating liquidity and was high resistance. Makes sense? Hopefully that makes sense. Yeah, let's make a note of this. I'm gonna go to the bathroom real quick, and then I'll come right back, and then we'll keep going. But I just think that's so sick. The lunch macro on Friday was so sick. So when is the lunch macro more likely to work? Okay, guys, I'll be right back, and then we'll come back, and we'll keep going. Anyways, guys, that's enough ranting for right now. I think I might just chill out for a bit. Yeah, there's like a million ways to take this. I mean, this was also a 1 minute change instead of delivery close after taking out midnight and 7:30, and this would be even higher RR. This would be even higher RR. This would be 4-1, and so we could look for a 15 minute implied gap. I like this one, right? 15-minute implied gap, merging these two candles together. So from the low of this wick to the high of this wick, merge these two candles together. That's an implied gap. So 15-minute implied gap. Then we end up getting S&T sweeping our true opens, and then 1 minute change in state off of the 15-minute implied gap. And you could enter on the lower one, right? Could you theoretically enter on the lower one? Yes, but that one's not so obvious to me. I think this one's really, really obvious. So I'd enter on this 1 minute change in state close. So we can mark out both of these versions of this trade, right? We have a 1 minute change in state off a 15-minute implied gap. And then we go run the low resistance liquidity. We could even measure out standard deviations, and we could target further, but I don't think you need to. Let's measure our standard deviations using the body to the body here. Interesting. Anyway, once again, there's nothing super obvious there for the measuring out standard deviations, unless you took this one. Actually, yeah, I like this one. And we go perfectly to the 8th. Okay, 1 minute change in state. We go run the low resistance liquidity. Let's get rid of this. 15-minute implied gap, 1 minute change in state. We deliver higher. Kind of cool. So 11:42, flow state close. 15-minute, 1 minute. And then we also have a different version where we retest this change in state, which, you know, this is more aggressive, but could you have taken this? Sure. So I'll mark it out. So there we go. And then you could target the low resistance liquidity. So flow state retest, 11:38. I guess I already have this one in here, but it's okay. 15-minute, 1 minute. Let's go ahead and save that. And then, you know, you could always have just taken this as a regular change in state if you had conviction. But yeah, I'm not going to mark that one up. 5 minute. Let's see. We end up getting a 15-minute change in state here. So maybe some people could take that, right? Yeah, let's get rid of this. So yeah, we sweep out true open. We sweep out true open. Maybe let's see if there was any other kind of key levels, right? Actually, you know what? It could have been an hourly or a 30-minute propulsion block. Now I'm very curious, right? Because we push down. Propulsion blocks are so cool. Like this one. This is a propulsion block. Wait, no, it's not. This one was. Look at this. Okay, the more I study propulsion blocks, the cooler they get. All right, we gotta mark this trade up because this is sick. This is sick. Yeah, we gotta mark this up. OB, right? We have one OB. You can even mark it out like this. So OB. Bro, imagine still thinking ICT concepts don't work in 2025, bro. Imagine most people think that, bro. That is, I genuinely feel bad for their, families and financial success, bro, because, dude, get with it. ICT concepts are how these markets move. Come on, guys. So OB, PB. Yeah, this is crazy. Perfect reaction off of it. So now we had a 15-minute key level. Now we look for a 1-minute aligned time frame change in state off of this propulsion block here. So 1-minute aligned time frame change in state. Bro, this is so nice. 15-minute OB, 15-minute PB, 1-minute change in state. Bro, yeah, you can't make this up. Holy crap. 15-minute OB, 15-minute PB. Oh my gosh. Wonder if we'd S&T. Actually, I'm so curious now. Here's 130. Oh yeah, we're below the true session open. Dude. It's actually crazy the potential we have, guys, to get so good at trading. Like we genuinely might become some of the best. Like everyone that's in my community, we might become some of the best traders in the world. Like genuinely. Like is this not exciting to you guys? And then 15-minute propulsion block, 1-minute change in state. Look how perfectly we retest that, by the way. So I mark this whole entire range out as accumulation here. Like this. Accumulation. Manipulation. Once again, do we have SMT? Like, I feel like we should. Oh, I think we do here. Yeah. SMT with YM. So partial A is just sequential SMT. Dang, bro. Sweep of the body. Reaction there. Manipulation of that low. And then we deliver higher. Man, does this stuff not just get you super hyped? And then 1 minute change in state, you can enter on the close or the retest. I'd enter on the close. Yeah, imagine thinking that ICT concepts didn't work in 2025. Lol. I genuinely feel bad for them and their families. This actually was a Phoenix model to the downside. It only worked for a short time though. But kind of cool. Yeah, this is one of those trades where like you could maybe even enter like that, but I'm not gonna do that. I'm just gonna have it be like this, right? That's clean. And then consolidation. Dang, bro. I know I'm supposed to be back testing Friday, but guys, this is just so fascinating. Like seriously. So yeah, here's my Dynamis model at work, at play. Guys, you guys just feel like we're so close. Like we're so close. We're so close to huge breakthroughs, guys. Huge breakthroughs. It's just a matter of time. Oh my gosh, bro. You can't make this up. You can't make this up. We are so close. But yeah, the fan is working, so that's cool. What? Hello? Why'd you do that? Man, I love London session. Oh, I wonder if this was in a macro. 250 to... Yo. Wait a second. Let's pull up the Hydra macro thing. Yeah. It was like right... It was 230 to 3 and then the 250 until 310 macro as well. look at that. Phoenix model occurs right at the start of the next macro. Bang. And once again, the macros only are valid until our drawn liquidity is hit. And then once our drawn liquidity is hit, macros end. Macro ends. So the macro is only valid for 7 minutes. So next we're going to look at that Phoenix model because I think that was kind of cool. Guys, we are so close. We are so close. You guys feel it? You guys feel like how close we are? We're so close, dude. Actually, let's just get rid of, we don't need 4 templates for consolidation. Let's just get rid of all the other ones. Oh, and you know what else? We're below midnight too. Okay, so this is our Dynamis model, or my Dynamis model, whatever you want to call it, right? Bro, people, man, guys, if you are literally just watching the stream right now, you are ahead of 95% of 99% of everyone else in the world by knowing that ICD by watching someone who's trading ICD literally it's crazy. 99% of the world does not have a clue, bro. Doesn't have a clue about how perfect these markets are. No idea. 99.9% of people have no idea. And if you're watching this video right now, bro, you're ahead of so many people. It's crazy. So yeah, here's Dynamis model. Dude. So 235. 235. Oh, this is gonna be on Thursday. And I gotta specifically be reviewing Friday because I need to make the market recap, but that's whatever. 235 Dynamis 15-minute aligning with the 1 minute. Dang. Okay, guys. Let's see if anyone's watching. I might go get something to eat and come back. Yeah, I kind of need to get something to eat. No one's even watching, bro. Okay, I'm going to get something to eat and then I'll come back. But, yeah, I'll be right back. Alright, yeah, be right back. Yeah, be right back. right. Let's get going. What up, JH? How's it going, bro? JH Tamim. All right, guys. So we got to keep reviewing price action for yesterday, so that way I can make the market recap. That's going to be important. Also, I did pop up the stream just for a little bit to see if it was making noise, and it's kind of making some noise, even though I replaced the fan, which I'm not super happy about. I don't know why it's doing that, but anyway, guys, let's keep going. I'm going to be trying to specifically review yesterday because we already reviewed, or because I need to do the market recap for yesterday. So, yeah. So, let's delete this. The cool thing about, it's just crazy how the market, it runs on high resistance liquidity. And then, what up, Omar? How's it going? But yeah, it's crazy because the market is high resistant, and then once we get to the opposite side of the curve, then it becomes low resistant. And it's like, okay, you just have to determine which side of the curve are you on. You know what I mean? Like, when you're in high resistant liquidity conditions, you got to understand that and then play that narrative, right? Then when we get to the other side of the curve, now there's your go sign to trade towards the low resistance liquidity, because it was high resistance turned low resistance. Let's see if we push into a key level here, right? We do. It's this 1 hour gap. I think I talked about this. So 1 hour gap. We purge this hippo right here. Kind of cool. And then we go higher off of it. I've never talked about hippos before, by the way. Well, actually, maybe you've talked about it once, but essentially it's a hidden order block. That's what a hippo is. A hippo is a hidden order block that's between two fair value gaps. That's a hippo. And it's in Hopalopka's book. But I don't know. Maybe I'm not supposed to talk about it, but anyway, I'm going to talk about it. Hippo. Let's actually resave this new template. And then yeah, 5 minute change in state. Yo, what up, BLJ? So 1 hour for value gap. All this was high resistant, becomes low resistant when we get to the opposite side of the curve. Look at this. This is such a clean 5 minute change in state, right? And we also induced that low into it. Once again, guys, these markets, they're incredibly precise. Look at how we essentially have no drawdown after we induce this low here, right? That's crazy. What up, everyone? Everyone's joining all at once. Let's go. Yeah, so right now I'm just reviewing price action for yesterday. Just kind of looking at what we have going on. I'm actually curious if we swept out a time level here, right? But we do sweep out Asia's lows. So this was a very obvious. The nice thing about yesterday was it was a very obvious London reversal, New York continuation day, where we sweep out Asia's lows. Let's actually look at Asia real quick. So Asia's right there. I'm just going to consider this part of it. I'm just going to actually mark it out as manipulation, just a regular manipulation, right? So manipulation of this low. Let's get rid of that. So manipulation here. I'm actually, you know what? I kind of want to look at New Day opening gaps real quick. Hang on. There was one right here. Okay, interesting. Yeah, dude, it was very, very classic, bro. And you know, we called it out live. That's the craziest part. We called it out live. I think it's so cool how this inducement, there's virtually no drawdown here in this inducement of this low. Crazy, crazy, crazy. Also, guys, I replaced the fan. I think it might still be making a noise. It's a different kind of noise, though, but I don't know how to fix that because I did replace the fan. Like, I did everything I could to, you know, fix the fan. So now it's not making that terrible noise anymore, but I can still hear the fan. I think it's probably just a normal fan, normal fan noise. But yeah, all this became low resistance, and then the draw on liquidity in the short term was Asia and PM, and then yeah, past that, we end up retracing. So the way I could take this, if I was taking this from let's see, at 6 a.m., let's say I was taking this at 6 a.m., is I would enter as a flow state retest, but I would not put stop all the way at this low. I'd put stop at this swing low. That's just what I would do, right? I'd take it like this as an inducement. Maybe even stop loss here, actually. And then you could, you know, target PM high and Asia high. That's clean. Yeah, 1 hour for value gap, purging our secret key level down there, and then delivering higher. All this being low resistance because we had our change of state delivery. And yeah. And this was PM high, right? What's flow state? Okay, I'll explain flow state. Yeah, for sure. So, flow state, let me actually screenshot this first, and then I'll explain flow state. Okay. Yeah, so, yeah, let me screenshot this first. Just give me less than 30 seconds and I'm going to explain it after I screenshot this. So 6 o'clock. Since I'm not putting stop loss all the way at the low, I'm calling it flow state mini. Flow state mini. And then one hour aligning with the 5 minute. Okay, so flow state. Flow state is essentially just trading a market maker model, and I don't know if you know what that is. You may or may not have heard that term tossed around, market maker model, but essentially the way market maker models work is you'll have some kind of key level. Usually it's like a fair value gap. So here, like this could be like a 1 hour fair value gap, right? And then what will happen is we'll chop around right above it. We'll get, so this is accumulation, right? Then we'll end up getting manipulation, which sweeps out the low, right? And then so there's manipulation. And then what ends up happening is, right, we end up getting usually reaction off of the low into the gap, and then we'll get an aligned time frame change of state delivery. Once again, you may know what a change of state delivery is, you may not, but all of it's important, right? So if you don't know what those things are, go watch my videos on them. I have a video on change of state delivery. I have a video on flow state. But essentially, when we get this change in state of delivery off of our higher time frame key level, and it's specifically the aligned time frame change in state delivery. So if it's a 1 hour gap, it's a 5-minute change in state delivery. If it's a 4 hour gap, it's a 15-minute change in state of delivery. If it's a daily key level, it's a 1 hour change in state of delivery. So when we get the change in state of delivery, you can either enter right on the close, or, and if you enter on the close, I typically don't have stop loss all the way at the low because I'm not anticipating us to come back. Or you can enter on the retest, and when I enter on the retest, typically you have stop loss at the low, but it kind of depends on the context. Sometimes I'll have a little bit higher just depending on if the market, there's a reason for the market to not come back there. And then yeah, enter on the retest of the change in state of delivery, and then you get tapped in, right? Limit ordered in. And then we run liquidity, right? Then you get your entry. So that's flow state. It's just a market maker model, but it's a name for it, a name for a way to trade it, right? Makes sense? Hopefully that makes sense. So the 3 things you need are a liquidity sweep, a higher time frame key level, and a line time frame change state delivery. It's not a variant. That's what it is. It's not a variant. It's the exact same thing. It's just it's like a name brand. If like there's a drug that there's like a generic name, which is market maker model, and then it's like the name brand. So this is flow state, but it's the same as market maker model. Flow state is the same as market maker model. It's the same. It's just the name, but you call it market maker model, you call it flow state. It doesn't matter. It's the same thing. But when I say flow state, that's what I'm referring to, right? So yeah. So that's essentially exactly what you see here, right? 1 hour gap, liquidity sweep, 5-minute change state delivery, inducement of this low, and then we go run those highs. Yeah, pretty cool, huh? So yeah, did I screenshot this? Whoops. What just happened? So 6 o'clock. I guess let's screenshot it again because I don't know if I screenshotted it. And then what else you can do is you can measure out the manipulation leg, either from the bodies or to the wicks, and that's gonna tell you good places to take profit. So kind of cool. Okay. So 6 o'clock. I think I already saved this, but I'm just gonna mark it out again. Yeah, I did. 1 hour, 5-minute. And the reason I don't have stop loss all the way at the low here is because it's a high probability inducement and there's a breaker. So basically, if we came below this breaker and below this swing low, that kind of like defeat the point of the trade. So I would put my stop loss there, right? And you can see I don't even use 2% of the stop loss. That's exactly what I'm trying to get at. Is sometimes you want to preserve stop loss, having extra stop loss for no reason. At least that's how I feel. Okay, let's go ahead and move on. Yeah, we dig down into this. I wonder if we have SMT in here. maybe. But yeah, this 1 hour inversion for value gap is kind of nice. Let's actually look at that. So this is just such a simple trade, but 1 hour inversion for value gap here, really clean. So yeah, I'm getting closer to being able to record this market recap. So 1 hour, whoops. 1 hour inversion for value gap. I'd put stop loss at the wick of the right hand side right there. And then target PM high. That's 2.38. Not too bad. Not too bad. We'll look around more as well. But let's go ahead and screenshot this, put it in the journal. Once again, I just try and mark out every single trade that I see, and just it's all a giant mental log, right? It's all a giant mental log of possible trades I can take. So in the moment when I see something, it's obvious and I take it, you know? And notice how this 1 hour for value gap, it cuts through candles, right? So the wicks do the damage, the bodies tell the story. So that 1 hour gap cuts through all those candles. So 4 a.m. Actually, you know what? I'm gonna mark it out that it's an inversion for value gap. So IFG. Guys, don't you guys just feel like we're stupidly close? Like we are stupidly close to just extreme profitability, and it's just a matter of time. You know what I mean? Like, do you ever feel like that? Because I feel like that all the time, bro. Four o'clock. IFG. 1 hour. Save. Oh, wait, did I put that in the right day? That's supposed to be on Friday. I think I didn't put it in the right day. Oh, yeah, I didn't. And I also didn't put this one on the right day either. Let's move these. The closer the better. Exactly, bro. Exactly. We're so close. Yeah, just a matter of time. 4 o'clock, inversion for value up 1 hour, 6 o'clock, full state mini. Okay, another confluence to this idea was that if you measure out this leg up to low to high, we rebalance the discount. That's just a thought. It's always important to like gauge that in your head. What up, Nick? How's it going, bro? So, yeah. What else, man? What else? You know what? I'm just gonna kind of explore the charts here. I'm not even looking for anything in specific now. I'm just kind of looking around. But yeah, just very obvious London low of the day, and then the rest of the day expanded. Let's look at stat map. Let's see if we bottom ticked it. Nope. But yeah. Let's look at session stat map. Maybe session stat map hit the bottom. Close, right? We got close. So once again, stat map's just kind of a guide. Yeah, guys. Are you testing ICT strategy? Yeah, I trade ICT concepts. And it's not a specific strategy. It's just trading. It's just like you know, it's just accumulation, manipulation, distribution, and then an entry to get on side with that. That's really it. So hopefully that makes sense. We could take a look at more of these high resistant liquidity trades. I actually think it's very, very cool. Like if you can identify the conditions, guys, like here, we can identify this is high resistant liquidity conditions. We can use it as a confluence. We can use it as a confluence. And that's what I was doing all day long yesterday. It's so cool. So actually, let's actually take a look at this, right? There's probably many opportunities trading with high resistant liquidity. It's crazy how much opportunity there is. When you literally just go through the charts and you look, right? It's crazy. So yeah, I kind of like, look at this. If we just identify this as high resistant, which it obviously was, right? We have 1 minute OB. I'm loving these propulsion block trades, guys. I love propulsion blocks in high resistant liquidity. We might need to go to the 5 minute, actually. Yeah, bro, there's so much to learn from trading. I use Malaysian SNR with Fair Value Gap. I'm still in practice stage. Yeah, bro, I feel like it's it's not even practice. It's a learning stage, right? We're always constantly learning and growing. Look at this propulsion block, guys. So I know this was on Thursday, but I kind of want to take a look at it, right? Where this was on Thursday, I know, but we're gonna actually take a look at it on Thursday. So we had an OB here. We have an OB, and then we have a propulsion block right here, right? And then you can clearly see it's a very, very small wick into the candle, but right here we wick into it and then we can trade against it. So OB, PB, and then jump down to, I'd probably look for like a 15-second or a 30-second change in state of delivery, because it was on the 3-minute chart. Yeah, I'd probably look for a 15-second. So OB, PB, and then now look at this, guys. Accumulation, and the key is also identifying accumulation, manipulation, distribution. If you can do that, you're going to be successful in trading. Accumulation. I'm loving these propulsion block trades, guys. Accumulation, manipulation of this high, and then here's that propulsion block. What prop firms you use? Right now, Apex and Top Step, and then I have a personal account. But I'm trying to trade more. So yeah, honestly, just trying to get better. So it's crazy how much opportunity there is if you just jump into the charts and actually look around, right? 3-minute OB, 3-minute propulsion block. And then at what point does it become obvious? So so conceptualize this. This is the OB. This is the PB. So then we tap into it a third time. Now we're waiting for this change in state. So I'll do this one right here. 15-second change in state. Right? So once again, this leg up was the OB. This leg up was the PB. So now we tap into it. 15-second change in state. I'm entering right on that. Does FTMO a good prop firm? I don't know enough about them. They've been around a long time. I'm pretty sure they got reputability, so I've heard they're good, but I don't actually know. I've never used them personally. Okay, accumulation. Oh my gosh. Let me draw this out. As a closure above or below a high or low of SMT. That's awesome, bro. You got to classify in order into what's the word? You got to classify in line with what makes sense to you, right? That is the key with trading. Like a lot of people tell you this is the exact definition. It's like no, it's what matters is does the concept actually make sense to you, and under your context does it make sense? And that's what matters to me, right? So anyway, 15-second change in state off of the propulsion block, right there, bang. I'd put stop loss there, and then target the low of the AMD. That's 3.48 to 1. You see how these markets are so precise, right? So 15-second change in state. And then yeah, I would target the low of the AMD. So this is my Dynamis model where you target, you enter on an aligned time frame change of state delivery off a propulsion block. Pretty cool. Exactly. You got to do what makes sense to you. And I'm going to preach that every single day because guess what? The only thing that matters in trading is how do you understand the concept, because no one else is going to click that button for you. So just like trust yourself. What makes sense to you, you know? I'm going to actually switch this. I'm going to switch my template for OB to be a little bit darker. And so, you know what? Like someone, and plus it's so misleading. Everyone in the trading world is like always trying to mislead you, and it's like, I don't know, man. At some point, you just have to say, I just have to trust myself, and that's what matters. Yeah, bro. I mean, I do what makes sense to me. You do what makes sense to you. And yeah, like I said, I'm going to do what makes sense to me. And these markets are incredibly precise, bro. Incredibly precise. So, yep. I don't feel any bad about it. You can see this would end up hitting like 10R, but I'm only shooting for 3R here, right? Yeah. Accumulation, manipulation, 15-second change in state. But guys, it's all fractal. So if I take a trade and I'm in line with the market, it doesn't matter what time frame it is. It doesn't. It's a lie. It's a myth. It's a complete myth. But you can't just not know what you're doing, right? You have to know what you're doing. And I'm not saying lower time frame is necessarily easy. It might even be it's harder, right? But the markets are precise. So 15:21. This was on Thursday, right? Oh, guys, guess what else? I didn't even mark this out yet. We have the macro, right? What's the macro? 15:15 until 15:45. So we're in line. This makes sense in terms of AMD, right? You can actually think about it like this. Like this was the tap of this higher time frame change in state. Right? You see this tap, we tap this higher time frame change in state delivery here. So 15:15 to 15:45, and look at that macro, guys. Look at that macro. Let's mark this out. So the trade is within this macro here. So I forgot to mark that out. Let's see if I have it. Okay. That's crazy, BLJ. Someone took a trade on the 1 second, dude. But no, it's true. It's all fractal, so You know, if he aligns his time and price like he needs to, then he can do that. It's just harder. So save 1521. Yeah, this was on Thursday, right? Yeah, 1521. Flow state. Entry on the close. 3-minute aligning with the 15-second. Bang. Sweet. Okay, and then actually I'm going to save this as 1515 to 1545. Wait, how did I mark out the other one? Let me look. I'm going to have it marked out exactly like I marked out the other one. Okay, so I'm going to mark it out exactly like that. Uh, 1515 to 1545. Perfect. How many macros are here? Are here or are there? So that is an interesting question because depending on who you ask, they're gonna tell you different answers. I'm gonna tell you my personal, what I've seen according to my back testing, right? From every from 50 of the previous hour to 10 of the next hour, that's the main macro that everyone knows, and that happens every hour. That doesn't mean that there's going to be a trade every hour, but if the market is ready to run liquidity and it fits in with your model, then that is the first possible opportunity. Once again, macros not necessarily like they have to deliver price. It's just if it aligns with your entry and your time and price align. What I'm saying is if it aligns with AMD, right? If the macro time aligns with AMD, it's just an extra confluence that, yeah, this is right when it's supposed to happen. Then from 20 until 40 of every hour, that's another possibility for when we could run liquidity. And then there's the unique specific ones that ICT talks about. And these are, there's 2 p.m. ones, 13:10 to 13:40, 15:15 to 15:45, and then there's a couple in London, but yeah, I can't remember them right now because I don't trade London that often. So, yeah. But yeah, basically, if AMD aligns with the time, you can treat that time as a higher probability time, right? You can see how that was the case here. To show you how it aligned with this model, right, we can probably just go on to the 1 minute, and we can actually frame this as a 1 minute market maker sell model here. We don't need to go on to the, yeah. So we could just frame this as a market maker sell model where we have a 1 minute change of state of delivery. This is exactly what I was trying to get at from before, right? This is a 1 minute change of state of delivery. And I'm guessing there must have been a 15-minute key level. Let's go ahead and see if there was. So when is a macro going to work? When it aligns with AMD, right? Yeah, there was a 15-minute gap here, right? You see that? So we have a 15-minute fair value gap, a 1 minute change state of delivery, which is the aligned time frame. 15-minute for buy gap, 1 minute changes to delivery, which is the align time frame, and then see how the macro, right at the start of the macro, is when we tap our change instead of delivery, which is our entry for flow state. This is what I'm trying to get at, right? The entry is a lot of the time it's going to be what I'm trying to say is if distribution, when we should distribute, aligns with the macro, that's how you know the macro is likely to work. Hopefully that makes sense. Yeah, so it just depends on AMD, right? Because any macro could work. Not every macro is going to work. It just depends on the AMD that's going on in that specific window of time. In this case, we had accumulation, we had manipulation, and so we backtest the 1 minute. I'd probably even consider entering right here because look at this. We backtest the 1 minute change in state right before the 15:15 macro starts. And then you can see that this ends up delivering price. We can actually measure out standard deviations here. So the key is align. The key is always align macros with AMD. Align macros with AMD. And I actually measured this out badly. I measured out from body to body here. And then you can see we hit our max extension perfectly. So yeah, once again, the key is the macros are gonna work. Actually, I might make a video about this later this week. When our macro is gonna work and when our macro is not gonna work. When it aligns with AMD. So you can see this macro aligned with the AMD. Let's make a note of this. Makes sense, right? That's when macros are going to work. They're not always going to work, but they will likely work when it's paired with AMD. Screenshotting. I'm going to make a video about that actually later this week. So how to know when a macro is likely to work. When it aligns with AMD. Okay. Dang, I never knew that. That's kind of cool. The first and last candles of a macro are very sensitive. That is so interesting. I never knew that. But yeah, you can see how the market maker model fits in perfectly with the macro. It's like a little piece to the puzzle. It's a little piece of the puzzle. So anyway, I forgot if I screenshotted it, but let's go ahead and screenshot it again. So once again, this was on Thursday. When are macros likely to work? When they align with AMD. Bang. Oops, I accidentally put a question mark in there. And then let's take another screenshot and then just call this, let's give it the timestamp of the trade. So 15:13 on Thursday. 15:13 flow state retest. 15-minute queue level, 1-minute change in state of delivery. It is very interesting. Yeah, 1513, flow state retest, 15-minute queue level, 1-minute change in state. Alright, I'm gonna go get some water. I'll be right back. Let's see how many people are watching. If there's anyone. Oh, let's go. 5 watching. Okay, guys, I'll be right back. Guys, we are 1 subscriber away from 1,400. That's so hype. There's so much to learn. There really is, dude. But it's cool. It's awesome. Like, it's cool how, every time you learn something, you just get a little better. One thing I'm actually noticing right now is I was thinking there might be S&T here, but I don't know. I'm not going to go look around for it. Let's just move on. So I got to finish back testing Friday. Friday had really clean price action, guys. Yeah, genuinely really nice price action. So, oh yeah, we were going to look at more trades of the high resistant liquidity, right? Because I think it's so cool how many opportunities there are taking trades off of high resistant liquidity. Because once again, this is a high resistant liquidity curve. Every time we come up to it, we're getting rejected and going lower. It's like this here, this is a propulsion block. Propulsion blocks off of high resistant liquidity are so nice. Like, once again, what is high resistance liquidity? When we're generating low resistance liquidity, right? When every time we come up to it, we fail to break it, and then people that are longing too early get wrecked and then finally we get an obvious change to delivery, and now we go run that low resistance liquidity. But in the meantime, it's high resistance. So, once again, high resistance liquidity. It's actually crazy how much opportunity there are in these markets. So, let's see. Here's an OB. Here's a PB. I just like observing these propulsion block trades because I think it's so cool. These are like some of my favorite trades, honestly. LB and then PB, right? We push up into the order block. We might need to drop down a time frame. I don't know. Maybe this one's not that obvious, but let's just look at it anyways. So, OB. Sometimes you can honestly just eyeball it. Like, I can just eyeball, like, this is a OB, this is a PB, and then this is a 30-second change in state off of the 5-minute one. Once again, this is my Dynamis model, guys, and I think it's so cool because, like, I say my Dynamis model because it's something I discovered from my back testing, right? I always thought, like, how do you take a trade with a propulsion block? And then, you know, I was like, well, probably just an aligned time frame change state delivery off of it. And then, you know what? You will look at it enough times and you eventually figure it out. And once again, guys, no one's going to tell you the correct way to do something. Like, no one's going to tell me, oh, Jake, this is exactly how you should trade propulsion block. No, they want to gatekeep it, right? No one's going to tell me the right way to do something. So you have to read between the lines and, you know, do what makes sense. So once again, when we have a high resistant liquidity curve, propulsion block trades are very, very nice. And so in this specific situation, I enter short here. Yeah, something like that. And then let's see, what can we target? I'd target the 4th standard deviation as final TP. Bang. Max extension, right? Note when this occurs. When does it occur? Right? When does it occur? 250. Right at the start of the macro. That's not a coincidence, guys. $250. That's exactly when we hit it. And then we finish the macro at 310. That's insane. Exactly, bro. And guys, once again, when we hit our max extension, that's when I consider the macro done, according to my back testing. You can do what makes sense to you, but for me, when we hit either our draw on liquidity or our max extension, to me, that's when the macro really actually ends. So put that in your notes. That I don't really care what happens. After we hit our draw on liquidity, I don't care what happens. So 250 to 310 macro. So once again, the drawn liquidity was that 4th standard deviation. So, and then what is this, right? High resistant liquidity curve. Meaning every single time we bump up against it, the market's telling us, actually, no, we're not ready to run liquidity yet. So this is high resistant liquidity. I'm using high resistant liquidity as a confluence for this propulsion block trade. I love doing this. And stop loss right where I measured standard deviations. Yeah. High resistant liquidity. Does that look random, bro? Okay. So anyway, let's go ahead and screenshot this. This happened overnight in London. This one's so good, I kind of want to put it in the Discord under trade opportunities. This one's nice. 250 Dynamis model, 5-minute key level, specifically a propulsion block, 30-second change of state. Bang. I'm actually gonna put this in the under trade opportunities. Cause that's like really, really clean. Friday, 2:50 a.m. That was beautiful. I know, bro. Bro, you should have seen the trade that I tape read on Friday. That was crazy. I tape read this trade on Friday where it was exactly like this. I had 0 drawdown. It was so cool. I didn't take it, unfortunately. But you know what? We're going to keep getting better till we do take those, you know? I'm just going to throw this away real quick. Let's keep this pulled up so people can see how clean this is. And this is why I always say, guys, just don't listen to anyone else besides what the charts tell you themselves. Because once again, people are going to try and distract you. People are going to try and tell you this is the way you got to trade. And at the end of the day, do what makes sense to you. Like, literally, T-Trade's like, macros aren't real. Shut up, bro. Shut up. Do time and price align. I don't care whether you call it a macro or whether you call it power of 3 or whatever. I mean, objectively, it's a phenomenon that occurs in the market. So I don't care what you call it. Macro. It's like he's like, well, technically, it's actually only because power of 3. Yeah, but it still exists. And obviously, everyone knows that. I don't know. T-Trades is kind of, I don't know. I'm not gonna lie. I'm not like a huge. I'm gonna stop saying bad things. All right, guys. Um, yeah. Once again, high resistant liquidity have some of the most amazing propulsion block trades. Right? We can tell when a market's high resistant, propulsion blocks are gonna work out just so nicely. Once again, OB on the 5 minute, PB. Whoops. That's actually, I kind of want to tweet that. I kind of want to tweet that. You know what? I'm going to tweet it. Wait. I'm not gonna lie. Where did I save this to? Oh, yeah. Wait, was this on Thursday or Friday? Hey, what up, Kirk? That was on Friday, so we gotta move it to the correct folder. Hang on 1 second. So I saved this in Thursday, and I meant to save it in Friday. Bro, Kirk, we've been making some insane discoveries today on the stream. Like, propulsion blocks, dude. In high resistant liquidity conditions, propulsion blocks. They are beautiful. They're genuinely so nice. Look at this. Right? We had high resistant liquidity, meaning every single time we came up to the trend line or, the what looks like low resistance liquidity in the moment, but we don't have an aligned time frame change state delivery yet, we get rejected by this, right? It's like a curve. It's a high resistant liquidity curve. Every time we go up to it, we get rejected. Propulsion blocks in these conditions, aligned time frame change state deliveries off of them are amazing. Amazing. Everyone follow me on Twitter, please. I need more people to follow me. It's sad. It's genuinely sad. And also, we gotta hit 1400 today, guys. We gotta hit 1400. We're one away. It's like, genuinely, that's so cool, guys. Thank you so much for everything. Genuinely. Whatever. I'm not gonna. It's fine. Let's just keep going. So, back to what I was talking about, right? This is not the only time that we have this occur. We have it occur again right here. Another one. 5 minute OB. Every time I think I know something, everything about a topic, it gets more interesting. I know. I know. It's like, it's crazy how true that is. Like, there's so much more to learn. There's so much more to learn. So yeah, once again, high resistant liquidity. High resistant liquidity. Hey, thank you, bro. Thank you, BLJ. I appreciate it. But it's genuinely insane. Is it not? Like, how precise these markets... Like, I kid you not, I'm 26 months into my journey, and I'm learning new things every single day. If that doesn't go to... if it was random, there's no way I could learn anything, because it would just be random. You know what I mean? The stupidity of people thinking this is random is just beyond me, bro. It's beyond me. I don't get it, and I don't need to get it, man, because they're not meant to be traders, is all I have to say. So, once again, you can kind of just eyeball it, right? This is obviously the OB. This is obviously the PB, right? So I kind of just eyeball it here. Let me circle it with my pen tool, right? That's the final move up for the larger move down. Here's another final move up into the original final move up, and then we break out the low. So now we go down to our aligned time frame, which is the 30-second. We wait for us to push up into it. We push up into it. We get a closure. You could enter on the close or the retest. Safe thing to do. Probably just wait for the retest in this situation. Actually, nah, you could definitely take this on the close now that I think about it. Hang on just a second. Let me think. Yeah, so once again, we push up into the propulsion block. We might even tap consequent encroachment. And then 30-second change in state. This is the obvious one, right? So you can enter right on that that candle on the closure, or you can enter on the retest. And then what I would do is I would measure out the move into the propulsion block as for standard deviations. Maybe it's better to measure this one out like this. Yeah, that's how I would do it. So this is kind of like a trial and error thing, right? In this case, this is, I want to be, when I measure something out, I want to measure it out in the most conservative way possible so I can make sure I hit all my TPs. And so I don't want to include this little part because the way I measure out standard deviations is I measure it out to where the tie from where I measured standard deviations is usually most of the time where I want to put my stop loss. So that means each standard deviation is going to correspond exactly to how much R I want, right? So when I see this move into the propulsion block, I actually just want to cut it off here because, I wouldn't really need to put my stop loss above that. So sure, you could do it like that, but once again, it's all personal preference. For me, that's how I would do it. And then I would target the fourth, which you can see here would have been a perfect hit. Once again, the market's the greatest teacher. And as always, you scale out. So TP1, TP2, TP3, TP4. And you don't need to go break even. Like sometimes you can go break even, but I don't know. I feel like sometimes break even kind of, in market maker models, sometimes break even can hurt you because we'll retest the change in state a lot. So I don't know. Just kind of depends. But I think maybe here I wouldn't go break even. So once again, using high resistant liquidity as a confluence, 5-minute OB, 5-minute PB, stop loss at the end of this move up. And then down to that fourth standard deviation. So you could take it like that if you wanted to. Where you wait a little bit, wait for it to retest. Hey, what up, Forex? Rusty, how are you, bro? Isn't it crazy how precise these markets are? Isn't it just crazy? I could actually measure it out like this because I think, and then now when I measure it out, it should be exactly 4. There we go. Exactly 4. The market has its own trading model built into it. It's called market maker models, guys. The market, the trading strategy is built into the fundamental aspect of how the markets move. Market maker models are literally, that's why I say, if you don't trade AMD, I don't even know if you're profitable, bro. It's all just AMD, right? You see this? Accumulation here. Manipulation of that high. And then distribution. Oh my, yo. Bro. And guess what time it happened? 50 till 10. Nah, this is actually really, really funny. Oh my. Yeah, look when we tap it. So once again, 50, 50, until 10. And honestly, guys, once again, I consider macros to be when the draw on liquidity gets hit. So the fourth standard deviation in this case. Now, you could argue that maybe your draw on liquidity was the end of the consolidation. And in that case, then we hit it around 5 minutes. So it kind of just depends. For me, honestly, yeah. If I was taking this trade for real, realistically, I think I would take all off there because that's just such a logical place to take profit. But you can see we kept going to that fourth standard deviation. So yeah, I honestly, no, now that I think about it, this is why we mark things out so we can learn. The third standard deviation, most logical place. Not the fourth, but in this situation, the third. Because it's right below that accumulation range. So I'm not going to expect us to go all the way further down because this is where the draw on liquidity is. So that's just based off of, common sense. Right? And so now this fits in with the macro very nicely. It's a crazy scalp, like 20 points. The points don't matter, bro. Points don't matter at all. What matters is risk to reward. I mean, and where you place your stop loss. Because as long as you do the math correctly, it doesn't matter. As long as you do the math correctly, I can risk $20 on this trade. I can risk $20 on, maybe not $20, but you get the idea, right? I can risk however many contracts I buy. So you just calculate, okay, for me, this would be 1.1 micros on my personal. So that's 11 micros of my standard risk size. That's 44. So this would be 44 micros on Top Step, and this would be 132 micros on Apex with what I risk, right? So I have to have that memorized in my head. This is something that I learned just recently is you really gotta be able to calculate that risk as fast as you can. If you don't have that memorized, guys, that's part of trading. That's part of trading is you gotta have that risk in your head, memorized, convert it to all your different accounts as fast as you can. If you can't do that, that's an issue. That's an issue because that's part of profitable trading. It's like part of probably same in CFDs. I don't know for sure, but part of profitable trading is the skill of calculating risk incredibly fast. That is not like it's such a multidimensional skill, right? Some people might be a good trader, but if they can't calculate risk in their head really fast, it doesn't matter. Now, sure, you could use an Excel spreadsheet. If that's the way you want to do it, that's totally fine. For me, I want to do it in my head because it's faster, right? For me, I want to do it in my head because once I get good at it, it's faster. But that's just me. You can use an Excel spreadsheet if you want. But yeah, accumulation, manipulation of this high, off the propulsion block, and then 30-second change in state down to third standard deviation, which aligned with our draw on liquidity here. Let's actually mark it out like this, right? Can you analyze gold? Hey, I guess it's the weekend, so if you guys want, I can analyze gold, because normally I tell people no whenever they ask me, but it's the weekend and I have infinite time, so theoretically, there's no reason I can't. So if you really want me to, I can. So let's go ahead and screenshot this. Oh, we have to add manipulation. Forgot. So M3. And then, yeah, TP. So, let's see here. What day was this? Thursday, 23:51. 23:51, Thursday. Dynamis model, which is just flow state off a propulsion block. And then 5 minute, 30 second. Bang. Saving that. That's clean. Yeah, 23:51. Or I guess actually this is 23:48 because I entered right on that. Bang. Wait, 23:58. No, 23:48. Okay. Yeah, so if you want me to analyze gold, just say it one more time and then fine, sure, I can analyze gold if you want. But as of right now, I'm going to keep going. So, 23:48. Dynamis. Save. Yeah, this was on Thursday, right? Yep. I vote no. Kirk says no. Though you use the same contracts until you reach a tier like in the shorts you made. So BLJ, that is a great point. So it's not the same contracts, it's the dollar risk, right? So let me pull up that short. So that's exactly right. What you said is exactly right, but not contracts. It's not contracts, it's I calculate how many contracts I'm supposed to buy based off of the dollar risk. So in this video, I made how to scale a personal account.
One of the hardest parts about tiers to
it says $200 risk per trade. So I'm actually doing 1/10 of that. I'm doing $20 risk per trade, and so I have in here to risk. It's kind of okay. I have in here that it's risking $20 per trade. Technically, I put in here that it's risking 200, but that's because it's on NQ. So just divide that by 10, and it's 20. So it's telling me in this situation I risk 1.1 micros to risk $20. But it depends. Like if I took a trade like this, maybe I had a half a stop loss, I would need to use 5 micros to risk $20. So it just depends what my risk tool tells me, and then based off of that, that's how many micros to use. Because once again, I put in the dollar amount of how much I want to risk into my risk tool. So then it outputs right here how many contracts I need to buy or sell. Does that make sense? So the dollar amount is what I up in the short video I made. The dollar amount is what I unlock at the next risk tier, not the contracts. The contracts is going to fluctuate depending on the size of my stop loss and the volatility and the risk of the time frame of the trade. Does that make sense? Hopefully that makes sense. It just depends on the context of the size of the trade. And whether it's if it's on the 15 second, I need to risk more contracts than if it was a trade on the hourly, right? But the dollar risk needs to stay the same. Okay. So yeah, Kirk voted no. BLJ voted yes. Clean price action gold. We'll take a look at gold for just 1 second, right? We'll take a look at gold for just 1 second. And then we'll pull up silver for SMTs. So I guess let's look at the higher time frame. I'm not sure if you want me to look at lower time frame or higher time frame, but you know what? I'm gonna be looking at the higher time frame because you didn't specify. Bro, this is perfect example of high resistant liquidity. We gotta acknowledge this, guys. High resistant liquidity, and then we probably had a propulsion block here. Oh my gosh! Once you see it, you really can't unsee it. It's actually crazy. So here we have an order block. So order block. So final move down before larger move up. And then propulsion block. Bro, you have to admit this is kind of cool. So you could mark it out like this if you want. And then 15-minute change in state. Bro. And everyone wonders why these violent moves will happen in the market. It's like, oh, it's just random. Man, these markets are so hard. They just know where my stop loss is. Nah, bro. No. No. Shut up. These markets are perfect. And you can see here that we have this as a propulsion block. So once again, 4-hour OB, 4-hour PB. 4-hour OB, 4-hour PB, liquidity sweep, 15-minute change in state. And when you get this, you want it to be obvious, right? It needs to be obvious that we're ready to go run liquidity. When we get this, it's very obvious that we're going to go run liquidity. We sweep out triple equal lows, and then we get a 15-minute change in state. See how light bulb this is, guys? So, accumulation, manipulation, distribution. So higher time frame, high resistance liquidity, lower time frame, low resistance liquidity. So I actually might even make higher. Ooh, what if I make high resistant liquidity dotted? Or what if I make it solid? Wait, now I'm kind of getting ideas. How can I design it to look different than low resistant liquidity? Maybe I can make it bigger. No, I don't like the look of that. I think dashed, bro. I think dashed. So high resistant liquidity. And then low resistance liquidity, meaning all of this. And then so we get a 15-minute change in state off of a 4-hour propulsion block. And then we can enter on the close. Holy crap, dude. And then target the end of the low resistance liquidity. Imagine people really think these markets are random, bro. Oh my. How do we tell them, bro? How do we tell them? Oh my. Okay, 4-hour OB, 4-hour PB, 15-minute change in state, and yeah, we deliver up to that LRLR there. Interesting how gold moves so quickly and violently. So this is gonna be 9:45 on Friday. So we gotta open up a new. I gotta open up my file for gold, which I never open up. And then Thursday. What was this? Friday, August 22nd. Oh, that was a while ago. 8-22-25. What? Friday, Thursday? Wait, I already forgot. Friday. And then now we're gonna open this. And then what time was this at? 9:45. Dynamis model. 4-hour, aligning with the 15-minute. And now we can save that. Yeah. Looks good. Okay, let's see if there's anyone watching. Also, maybe we hit maybe 1400. Maybe, I don't know. It'd be crazy if we did. Hey, there's 3 watching. I don't think we did. I just looked at it. Yeah, we didn't. Rip. Okay, whoever wanted me to look at gold, I don't know where you went, but I'm honestly done looking at gold since you're not here anymore. So I don't want to look at gold anymore. You're okay. All right, we'll keep looking at gold. What do you want me to look at specifically with gold? Like, what's gonna happen next? So I guess let's go on the higher time frame then. We here, bro. Oh my gosh. Okay. All right. Well, I guess we should probably start at the higher time frame. So, holy, gold is just in expansion, huh? Gold is in an expansion phase. I feel like gold is constantly in an expansion phase. Can you check Discord once, please? Alright. Nice, bro. That's sick. You used a hidden OB. That's so sick. You marked out hidden OB. Used a hippo. Bro. That's awesome. And then you have an extreme OB before rally. That's awesome, bro. I love it. Okay, so yeah. So I guess to figure out what's going on, we kind of need to frame a higher time frame model. So let's start out by doing that. So, wow, gold. Why was gold sucking so much for 30 years, bro? Goldbach. What? Yeah. What about Goldbach? I love Goldbach. Why was gold sucking so much for 30 years, bro? Nah, genuinely, what is going on with gold? What happened? So, okay. I guess let's start out on the yearly. We're going to start out on the yearly chart, bro. I've never done this before. Accumulation, obviously. Accumulation. Manipulation. Inverse fair value gap. On the yearly. And then we obviously had distribution after that. So yeah, we could take a look at Goldbach first. Let's start with Goldbach. So we had an inversion for value gap, liquidity sweep. So we're gonna need to pull up a pretty higher time frame Goldbach here. Okay, we're one dealing range. Play on words, go gold and Goldbach. Yeah, bro. For real. Wait, I've never seen this before. Is this... I wonder if this is the default Wix. Hopefully I didn't mess that up. Now I'm actually really... now I'm actually so curious. There's so many more settings that I've never seen before. AXR look back. Time zone. This is something I'm going to mess with. Wicks or bodies. AMD boxes time frame. The time frame to use the drawing for AMD boxes. Oh, this is AMD boxes. Okay, never mind. So that's for if you have this button. Okay, never mind. Yeah, it doesn't have anything to do with the Goldbach levels. Okay, guys, sorry I got sidetracked. So, people think Goldbach doesn't work. Bro, who's gonna tell him? Who's gonna tell him? Oh my. Ugh. People think Goldbach doesn't work. Goldbach is the algorithm, bro. I mean, I don't know exactly how it works, but I can tell you one thing, that the fact that the low of the entire gold for its entire last 70 years was the exact low of the Goldbach range. To have that happen, bro, is impossible. It's impossible. This is impossible. This is the low of Goldbach in its entire last 60-year history. This is the low of gold in its entire last 60-year history. And the low aligns with the low of the Goldbach. Bro. Guys. Goldbach has been around much, much longer than most of you guys have any clue. That's insane. Genuinely, my mind can't comprehend that. I'm not gonna lie. That is insane. Gold batch. So yeah, obviously this was accumulation. So when you look at it like this, it's pretty obvious that this was accumulation. 369. Yeah, essentially. Accumulation, manipulation. No, I have to make a video about this too, bro. What the freak? I have to make a video about this. This is insane. The low of gold in the last 70 years. I'm going to pre-make videos for this week. The low of gold for the last... What year was this? 1975? And now what year is it? 2025. The low of gold block for the entire last 50 years. The low of gold for the entire last 50 years perfectly aligns with the low of the gold block dealing range. Imagine people thinking this is random, bro. Oh my gosh. Oh my gosh. This is hilarious. Okay, anyway, let's try and move on. Let's try and be serious here. So what happened? This is the yearly chart. We had accumulation, manipulation, and now distribution. We're at the high of the dealing range. So what now, right? Honestly, this might be a much higher dealing range that's at play. Like if I switch this over to 6561 and then make this go up one, it's very possible that we're in a much higher dealing range than it's showing. Unfortunately, we don't have the data going back past 1975. I wish we did. But looks like, if I had to guess, the low here was at 0. Right? So we just tapped the fair value gap partition. So my guess, guys, with gold is we're heading to the dealing range high, which since we hit the fair value gap, we're probably heading to the dealing range high, which means that's about 6,554. And if I measure out standard deviations of this manipulation leg, we've already hit the high of that. How about this? "5 minutes, can you tell how to enter gold box settings?" Yeah, I'll help you out with that. So what you do, right, is this is it's called, the indicator is called DMN's AMD gold block. And get rid of everything besides GB levels, only have that one checked. And DR shift, this is going to basically shift the dealing range up and down. And you're going to want to have 1/2 steps turned on. This is really important. Actually, this is part of the reason why I did not understand gold block for the longest time. You just got to turn it on half. Shift it 1/2 it's going to shift it 1/2 at a time instead of one at a time. And it actually makes a big difference. So make sure this 1/2 is clicked. This just pulls up additional ranges. This doesn't really matter. I don't know what this is. This matters. This, you're going to need to basically, this is what adjusts the size of the dealing range. So, yeah, the lower number is a smaller dealing range. The higher number is a higher dealing range. And past that, those are the only important things. All this other stuff I've yet to really learn. DMN's AMD gold block. You can't find it? Okay. It's right here. DMN, parenthesis S, AMD gold block. It's right there. So type in DMN. But anyway, we tap the low that fair value gap partition perfectly. So that's telling me this is likely. I can't tell what happened before 1975, but what I can tell is we hit the fair value gap partition. So this is probably a 2022 model, meaning we're probably expanding to the high of the dealing range. So yeah. Let's see. I wonder if we measure this out. Yeah. Not totally sure. But I guess let's jump down a time frame, right? So dropping down. So we're starting out the higher time. Man, this is really a side quest, huh? We're really jumping down the lower time frame and then going deep into this. Yo, what up, Sorab? How are you, bro? We're kind of on a deep side quest right now, going through the history of gold to figure out what's possibly going on. It's a deep side quest. Let's just say that. So, anyway, look, we had obviously we had accumulation here. Looks like we sweep liquidity into the low of the dealing range. Then, actually, we might need to pull up the weekly chart. So accumulation. We sweep liquidity into the low of the dealing range. And a fair value gap forms in the fair value gap partition. We had broke structure. So to me, this was the 2022 model, right? On the higher time frame. So once again, probably drawing to the high of the dealing range from a gold box standpoint, right? Once again, this is just totally speculation, guys. So 2022. So let's measure out this. And this makes sense from what's it called? From the standpoint of standard deviations, because in between 4 and 5, that's where models typically tend to max out, right? In between 4 and 5. So, right? I think you just got to be bullish on gold. Bullish on gold for a long, long time. I don't think we're going to... There's no reason to be bearish. It's obviously a higher time frame bull market. So this was the past 5 years. Let's go and jump down again to another lower time frame. And I'll also mark out this is the 4th standard deviation here. Guys, yeah, we're on a giant side quest, bro, to figure out the history. What could be going on with gold? So jumping down to a lower time frame. And then let's shift this down a dealing range, because I'm pretty sure that's what we need to do. So this will be a daily chart. So we swept liquidity here into the low of the dealing range. And then looks like we broke structure here. Or, you know, all of this, I guess this is the obvious fair value gap right here. Yeah. Fair value gap within the fair value gap partition. So once again, we are expanding to the high of the dealing range, which aligns with our higher time frame 4th standard deviation here. So okay, so liquidity sweep 2022 fair value gap. Let's drop down another time frame. Yeah, guys, I think we're going to expand up to this dealing range high. That's what I think, yeah. ICT also took the trade you took on Friday. Took the exact same trade as me. That is hilarious. That is genuinely hilarious. He took the exact same trade? Bro. Okay. So I'm going to get rid of the gold block. We know we're obviously in a bull market. That was just kind of just for fun, right? From an AMD point of view, we just kind of had a... Actually, you know what? Maybe gold block could be helpful for this. Alright, I'll have to check it out. Yeah, actually, you know what? Maybe it is helpful here. That's that's pretty cool, bro. So yeah, fair value gap. I might need to turn this up one. So yeah, we swept out that low gap formed here. Okay, guys, I think I'm not entirely sure, but if I had to guess, right, we have. Wait a second. Is this what I think it is? We have another OB. Yeah, we had an OB. OB. And then a PB. So maybe we're gonna keep going up. That's what I think. Let's go down to, so this is a 4 hour. Let's go down to the 15-minute. So OB, PB. Yeah, guys, I think this was a 15-minute change in state right here. And then now we're expanding off of this. So I think we're going to keep going higher. I think we're going to drop to this wick and then past that even higher. So that's what I think for gold. Let's measure our standard deviations of this. Yeah, bro. I think we're going to drop to that wick. I don't know, though. I really don't know. I might take another break, guys, and then come back later. But I'm not going to lie. Goldbox, really interesting stuff. Bro, we're one away from 1400. So close. Oh, man. I still need to finish back testing tomorrow for yesterday. I might take a break, guys, and then I'll come back, finish back testing for yesterday. And then I'll film the market recap, and then finish everything else. Okay, that's what I'm going to do. Kirk misses NQ. Yeah, Kirk, I think I'm going to take a break. I don't know how long it's going to be, but I'm going to take a break, and then... Or maybe I'll just go to the bathroom real quick. And then... I need to get this market recap filmed, so I'm going to just go to the bathroom. We'll finish back testing for yesterday, and then I'll film it. So just hang on. I'll be right back. The important thing is I just got to get it filmed, so... All right, guys, let's go ahead and finish with NQ for yesterday. Don't forget your video ideas. Yeah, I wrote them down. I wrote both of them down. Guys, I'm gonna start. I think one thing that's gonna help for time management during the week is I'm gonna start pre-recording videos for. I'm gonna start pre-recording videos on the weekend, so that way I have just that little bit of extra time during the week, which hopefully will make a big difference in terms of my being able to rest and just relax. And because I do so much during the week, I gotta be able to figure out how can I take a load off of the actual weekdays and move some of that load to the weekend so I can relax and not be so stressed out during the week. So that's an idea I had. But yeah, okay, guys, let's go ahead and let's start going over NQ, and we'll finish out for back testing of the day yesterday, and yeah. So the main thing to know is we have been expanding on NQ, right? We have been expanding. We had a propulsion block. This is something that I noted a while ago, actually. And, I wish I actually listened to my own self. Because it's a really nice propulsion block. 4-hour PB. Oh, you can't see me. Oh, yes, you can. 4-hour OB. That, once again, swept out all these lows. And then 4-hour PB. So my guess is we just got to be bullish for quite some time, because the OB took out all these lows, and then the PB took out these lows. Then we tap it barely. Or maybe you can consider this the PB. It doesn't really matter, to be honest. Same concept. And so, with this in mind, guys, it kind of seemed like this was high resistant liquidity, right? Market was failing to break through it, which tells me the market wants to go higher, right? High resistant liquidity curve. And so the question is, how high could we go? Well, let's measure out this leg here and maybe this leg here. Yeah, I'm really thinking that we'll probably go to, yeah, we're probably drawing to the to 25,600. So yeah, guys, I would be bullish here. This was a perfect reaction off of the change in state of delivery here. So I think we're in a much higher buy model than a lot of people are realizing right now. And yeah, once again, accumulation. Yeah, I think we got to be bullish here until proven otherwise. Accumulation. Come on. What? You know what's could be interesting is we could actually take a look at gold block here. I'm actually curious now. I am too curious to not look at gold block. Now I gotta look, dude. So I want the low of the dealing range to be around here. That's probably where I would expect it to be. Yeah, that adds up. That adds up. Right? So we have the low of the dealing range here. Break of structure, fair value gap. This is the fair value gap within the fair value gap partition. We obviously use that. And yeah, I think we'll go up to this fourth standard deviation here, because this is a change state delivery here and change state at least up to around here in this area. So right now I'm bullish. That's probably what I'll say. So liquidity sweep, break of structure, fair value gap, which aligns with our gold block partition. So I'm going to put this in Saturday. So NQ September 9/20/25 Saturday. So yeah, like I said, higher time frame model expanding upward until proven otherwise. So, okay. Now, with that in mind, we're just constantly expecting buy model after buy model after buy model, right? Every single gap, buy model. Buy model that thing. It's a buy model. Every single gap's a buy model. That's the key with hard time for bull market, is every single gap we're considering it to likely be a buy model. So yeah, I think honestly, guys, I think we're ready to film for the most part. I mean, from what I could tell, it wasn't super deep. We just, had a fair value gap, swap liquidity into the dealing range low. Yeah. That's crazy. That's pretty cool. So, yeah, guys, I think we're ready to film them. I'll film it in just a bit. But yeah, for now, guys, I'm going to take a break, and then I'm going to film it, and then I'm going to do a full week backtesting session later tonight. So, yeah, guys, we got to hit 1400, bro. We're so close. Let's go! Let's go! We hit it! Let's go! W's in the chat, bro. W's in the chat. Okay. But anyway, exciting stuff, guys. I'll see you guys later when I end up doing this full week back test after I film my video. So, yeah, thank you guys so much for watching. And with that, I'll see you guys in the next one. Guys, follow me on Twitter. I need followers on Twitter, please. No one follows me on Twitter, bro. And then with that, guys, I'll see you guys in the next one. Peace out. E, that's not a W. W looks like this, bro. W looks like this. E looks like this, bro. E looks like this. W looks like this. Wrong letter, bro. Wrong letter. Peace out, everyone.